Hey, my dear students, hope you guys are all doing good. Hope you guys are all perfectly fine. I do wish and hope that you guys are preparing for the upcoming examination in a great manner. So, in this video, I'm going to talk about the most important questions which you have to refer from the MTP series. So, as I always insist, before you go for the examination, you have to definitely have a look at RTPs and MTPs. RTP video I have already uploaded. Now, in this session, I'm going to talk about MTPs. And in this MTPs also, there are a few exceptional questions. There are few must refer questions which have a high chance of getting tested in the examination. Some new questions were also there. That questions I will focus more. Whatever routine regular questions are there, that we will quickly go through, but whatever exceptional questions are there, whatever must refer questions are there, that I will take some time and I will try to explain it here. Right. So first I will start with series 1. Both series of MTPs will try to cover in this single video, will not take much of your time. So whatever is relevant there, we try to spend more time. So first we have series 1. In the series 1, we have first case scenario based MCQs. Let us try to address the case scenario based MCQs. Everywhere we will try to do it. Here we have in the case scenarios, yes, in series 1 there are especially a few tricky things are there. Series 2 MCQs are straightforward, but in series 1 MCQ, yes, it is worth spending the time here. Let us try to have a quick look at it. So case scenario number 1, CA Trustworthy has accepted audit of the financial statements of a company, Precision Industries Private Limited, for financial year 24-25. The company's annual turnover for the financial year 24-25 is approximately 250 crores. As he is conducting the audit of the company for the first time, that means it is about initial audit engagement. He started gaining knowledge of the business and its internal controls to identify and assess the risk of material misstatement. In this regard, he has made inquiries from certain personnel, including company's in-house legal counsel, various departmental heads. As such, inquiries can divulge information that is likely to identify and assess the risk of material misstatement due to fraud or error. So nothing but, as we all are aware, first we perform risk assessment procedures. And if you remember the discussion from risk assessment and internal control chapter, risk assessment procedures can be performed by way of inquiries, inspection, observation, and analytical procedures. So here they are saying that auditor is trying to do inquiries with different people to identify and assess the risk of material misstatement. Okay. The company is also having internal audit department headed by Mr. A. Precisely, he has inquired from the following persons to identify and assess the risk of material misstatement. With various persons he has inquired. Mr. A, head of internal audit department, Mr. John, who is in-house legal counsel, Mr. I, who is an IT system head. With all these people he has inquired. Okay. Later, while conducting audit, he observed application of few controls in IT systems. He also made extensive inquiries from middle level IT personnel also about application of various controls. Okay, fine. Based on information received from inquiry of Mr. John, risk of material misstatement in litigations or claims involving the company was assessed by him. He did the inquiry with Mr. John, no? So who is an in-house legal counsel. By doing that inquiry, he was able to identify some risk of material misstatement. So as we all are aware, if you identify risk of material misstatement regarding litigations and claims, then we have SEP'25, which says that you need to perform further audit procedures by communicating with entities external legal counsel. First, we try to perform risk assessment procedures. Through the risk assessment procedures, if we identify any risk of material misstatement, then further audit procedure is what? Communicating with the entities external legal counsel. So that's what they try to say here. The auditor inquired in-house legal counsel. He found that there is a risk of material misstatement, and it was also decided later to issue letter of inquiry to Mr. F, who is an external legal counsel. So this is what something we have seen in SEP'25. If you find risk of material misstatement in the area of litigations and claims, you have to communicate with the entity's external legal counsel through a letter of inquiry. See, these three are risk assessment procedures. See, inquiring internal audit head, in-house legal counsel, IT systems head. This is all part of risk assessment procedures. Whereas communicating with entities external legal counsel, this is a part of the further audit procedure. So these three are risk assessment procedures, but communicating with external legal counsel. Once we identify the risk of material misstatement, then we communicate with the entity's external legal counsel, which is a further audit procedure. Next, he has also gone regarding this. There will be one question. Let me address that question here. In the context of inquiries made by CA Trustworthy, which of the following statements is true? He made inquiries with different people, no? So let us see. Inquiries from John and F are in nature of risk assessment procedures. No, F is not a risk assessment procedure. No, like if you see inquiries done with Mr. A, Mr. John, Mr. I, these three are risk assessment procedures. Inquiry with Mr. F is a further audit procedure. Next, inquiry from A, John and I are in the nature of substantive procedures. No, they are risk assessment procedures. Inquiries from Mr. A, John and I are in the nature of risk assessment procedures. Yes, this is a correct statement. Inquiries from John and F are in the nature of substantive procedures. No. So whatever inquiries he's doing with A, Mr. John, Mr. I, these three are examples of the risk assessment procedure. Whereas inquiry with entities external legal counsel, Mr. F, is a substantive audit procedure. Next. He has also gone through internal audit reports submitted to the management and decided to use internal auditors to provide direct assistance, SA610. So he decided to make use of internal auditors for direct assistance to perform the following procedures. So different procedures he want to allocate. What are they? To watch for few expenses bills, nothing but to basically verify the expense bills. To trace transactions through information system, basically verifying the transactions in the information system. To verify accuracy of aging of trade receivables, yes, fine. To evaluate the appropriateness of management's use of going concern assumption. Do you think this area, can it be allocated to internal auditors for direct assistance? Absolutely not. Why? Because if you remember SA610 discussion once again, those areas which have in which significant judgments are involved, those areas should never be allocated for direct assistance. This is one such area where going concern assumption you are verifying that is full of assumptions and judgments. This area should not be allocated to internal auditors for direct assistance. So like if you see here, in which of the following areas CA trustworthy is unlikely to use internal auditors to provide direct assistance? In which area? In this yes area, to evaluate appropriateness of management's use of going concern assumption. So work as stated as point number yes, that work you should not allocate it to internal auditors. Next. During the course of audit, he has verified samples of sales invoices with entries recorded in the books of accounts, and also he sent the external confirmation request to trade receivables. There were total 100 trade receivables outstanding as of 31st of March, and it was decided to send external confirmation request to 20 trade receivables. That means we have a total population of 100 trade receivables. In that, auditor wants to send external confirmation on sampling basis. He wanted to send confirmations to 20 people, so sample size is 20. He had chosen one trade receivable balance randomly, and thereafter every fifth balance was chosen. This is what we call it as systematic sampling or interval sampling. So where we divide the required population size with size of the sample size, we get something called sampling interval. Every nth item we are going to select. That's what he has done. Population is 100, required sample size is 20, sampling interval is 5. Every fifth item he is randomly selecting. So this method we call it as what? Systematic sampling, right? Then the responses to external confirmation request were duly received. Okay. Now, if you look at the question, with regard to audit evidence obtained during the audit, which of the following statements is incorrect as discussed in the case scenario? What are that? Let us see. Sales invoices and responses to inquiries from middle level IT system personnel are examples of internal evidence. Yes, they are asking us to find out which is an incorrect evidence. So whatever evidence you have got from the sale invoice and asking the doing inquiries, from that you got responses. Is that forming part of internal evidence? 100% yes. Audit evidence obtained from inquiry of middle level IT system personnel is more reliable than observation of application of few controls? Absolutely not. If you remember the discussion, whatever we had in the audit evidence chapter, we have 7 methods. In all that 7 methods, inquiry will give the least reliable evidence. But here they are saying inquiry will give more reliable evidence than observation, which is actually not. This is the incorrect statement. They are asking us to find out incorrect statement only. This is the incorrect statement. Next, responses to external confirmations are examples of external evidence. Yes, this is also correct statement. Internal audit reports are an example of documentary evidences. Yes, everything is correct. So they are asking us to find out incorrect statement. B is incorrect. Next one. While selecting samples of trade receivables described in case scenario, which method is being used? As I have told, systematic sampling or interval sampling. Choose option showing correct values of population, sampling interval, sample size respectively from the description in the case scenario. So population is 100, required sample size is 20, sampling interval is 5. So that's what the correct order here: 100, 5 and 20. 100 is a population, 5 is a sampling interval, 20 is a sample size. Okay, next. Now we have one more case scenario. Let us try to understand it. CA Mahavir, a partner at ANJ & Co, is conducting the statutory audit of a branch of Fair Bank for the year 2024-25. During the course of the audit, he made the following observations. So while conducting the audit of this bank, the auditor had some observations. What are they? A loan of 12 lakhs was sanctioned to farmer for cultivation of sugarcane, a crop that typically has a harvesting cycle of 10 to 12 months under Kisan Credit Card Scheme. So the bank has given loan for an agricultural crop whose crop season is 10 to 12 months. So it is a short duration crop. The account had no transaction since the last 120 days. However, the branch continued to classify the asset as a standard category. Is it valid? Yes. Why? Because for short duration crops, if they remains overdue for more than 2 crop seasons, then we have to classify it as NPA. Here it is, here the crop season is somewhere around 10 to 12 months, but it is only overdue for 120 days, hardly 6 months, or not 6 months, 4 months, right? So here it need not be classified as NPA. Why? Because up to 2 crop seasons, if it is overdue, you need not classify it as NPA. So if you see it here, out of this one question you will have, which of the following is most appropriate regarding the sugarcane KCC loan? The account is overdue beyond 90 days and must be classified as substandard? No. The loan must be treated as NPA? No. Since the crop cycle exceeds 6 months, the account can still be standard despite no transaction for 120 days. So this is the correct option. You need not classify it as NPA. You can continue to keep it under standard category only, right? Then, yeah, this one. The branch has taken over a term loan of 60 lakh rupees from another bank. However, the branch manager approved the proposal even though such limits require sanction by the zonal credit committee as per the manual of delegation of powers. That means even without proper authority, even without proper sanction, the loan of 60 lakh rupees has been sanctioned. Out of that, we have one question regarding the term loan takeover of 60 lakh rupees from another bank. Which of the following is most appropriate? So without sanction, they have given this loan, right? Out of this point, they are asking you what you will do. It is a routine matter and auditor need not intervene. No. It reflects a breach of sanctioning authority and should be reported in the audit findings. Yes, this is what you are required to do. Then the manager can exercise discretion up to 75 lakhs. No. Since the account was performing, the sanction irregularity is immaterial. No, it is a breach of sanctioning authority. It has to be mentioned in your findings. It has to be reported in your findings. Next one. It is noticed that head office of bank has flagged a savings account maintained in branch in which interest was wrongly paid at higher rate due to wrong data feeding entry. Now situation has been rectified by debiting excess interest paid in the account. Since there was little balance in the savings account, there was a debit balance of 1.35 lakhs was created in the said savings account due to above reversal. The matter was immediately informed to the account holder. However, he has not turned up for payment since matter was informed to him about 6 months ago. So, will this account be classified as NPA? Yes, since it is overdue for more than, since it is an amount receivable by the bank from the customer and it remained overdue for more than 90 days, this is also required to be classified as NPA. It is not something like a direct loan given. Basically, they have paid more interest. Now they are reversing it. They informed the customer also, sir, we have wrongly paid you the interest. Whatever excess amount is there, you please give back to us. So that is also an amount recoverable by the bank from the customer. Even if that amount remained overdue for more than 90 days, that has to be classified as NPA. So if you look at the question here, as regards debit balance of 1.35 lakhs in the savings account, which of the following is correct from the point of view of an auditor? Interesting question, guys. The debit balance of 1.35 lakhs should be classified as NPA. Yes. The situation does not attract RBI norms. No. The situation does not attract RBI norms on asset classification as no credit facility was granted. This is also not. The bank cannot demand excess interest paid to account holder. This is also incorrect. So option A will be correct, even if you try to cross verify with the answer. So question number 8, we have the option as A. So this account has to be classified as NPA because this is the amount recoverable from that customer. Next one, few more facts here. Due to time constraint, CA Mahavir is under pressure to issue an unmodified audit report in the limited time frame. He has insufficient time to properly perform or complete the relevant duties and issue appropriate audit report. That means even though you don't have proper time, even though you don't have proper resources to complete the audit, still you are under a pressure to give the audit report. And if you are doing such engagement in that circumstances, will you be able to do the engagement in a proper manner? Will you be providing competent service to the client? No, you are incapable. No, if you don't have time to perform the responsibilities within a deadline, that means you are not competent enough. But still, if you have accepted the audit, then you would have breached that professional competence. You are not providing capable services to the client. So if you see here, which fundamental principle governing professional ethics is disregarded by CA Mahavir by issuing an unmodified audit report? So you are violating on professional competence. You are an incompetent. If you don't have time, you should not have accepted it. Right. Next one, we have one more case scenario. Arya Limited is a company engaged in the manufacturing of stainless steel household items such as hot pots, pressure cookers, bottles, and cutlery sets. The company is having its corporate office in Delhi manufacturing plant in Ajmer, Rajasthan. To meet growing demand, Arya Limited planned to expand its manufacturing by setting up two new plants in Raipur district and also raised 5 crore rupees by issuing the equity shares of face value of 10 at a premium of 5. The company had reserves and surpluses of 2 crore rupees, which includes the securities premium and general reserve, and SK and Associates statutory auditors since financial year 22-23 planned the audit and assigned the roles accordingly. What are they? RIA, an article assistant, was asked to perform analytical procedures on raw material inventory for obtaining evidence with respect to overall reasonableness of the purchases quantity and price of inventory. One of the article assistant has been asked to perform analytical procedures on raw material. However, she collects the reports from the management for raw materials as a percentage of total stock and compare the same with the data of the previous year. So she calculated what is the percentage of raw material in the total stock. That percentage she compared with the previous year. So what do we call this? If you go to the audit of items of the financial statements, in that purchases, there they say 4 kinds of analytical procedures like stock composition analysis, right? So this is actually that example of the stock composition analysis. She is doing stock composition. Like if you see here, which of the following analytical procedures were performed by Ms. Ria to obtain audit evidence regarding raw material inventory? So she is actually doing their stock composition analysis. In the total stock, how much is the raw material composing of? So stock composition analysis she is doing. Next, Shobit, a paid CA, was assigned the physical verification of inventory. CA Shobit was present at the physical inventory count but did not record the dates or test counts, although he took some photos. Although some photos were taken. So is there any question out of it? No, there is no question out of it. Next one. Audit documentation gaps were also observed regarding basis of materiality and related party transactions which were discovered during the audit but not adequately documented. Okay, so some documents regarding related party transactions are also missing. Now what is the question? Which of the following statements is incorrect with regard to the use of the securities premium account under section 52 of the Companies Act? So they have given options here. Out of that we have to choose which is the incorrect option regarding the utilization of input tax credit. Option 1, where a company issues shares at a premium, whether for cash or otherwise, a sum equal to aggregate amount of the premium received on those shares shall be transferred to a securities premium account. Do you agree with that? Yes, that amount should go to securities premium. This statement is true. The securities premium account can be applied by the company in paying up unissued equity shares of the company to be issued to the members of the company as a fully paid bonus shares. Can the securities premium be issued for can be used for issuing fully paid bonus shares? Yes, this is also correct only. The securities premium cannot be applied by the company in writing off the expenses or the commission paid or discount allowed on the issue of equity shares of the company. Writing off of the preliminary expenses. Is it permitted or not permitted? It is permitted. But what is the question saying? It cannot be applied, which is wrong. Why? Because you can use it for writing off the preliminary expenses. They are asking you to find out incorrect statement. They are telling it cannot be applied, which is wrong. It can be applied. So this statement is incorrect. Next one. The securities premium can be used by the company for the purchase of its own shares. For buyback, yes, they can use it. So which is the inappropriate option? Option C is the incorrect option. That's what even they try to say it here. So 10th one is option C. Securities premium can be used for writing off of the preliminary expenses. Which of the following should not be part of audit documentation for related party transactions? So they have given various options. In that we have to choose which one need not form part of audit documentation. Management representation letter, yes. Related party transaction policy, yes. Documentation to show that such a transactions at arm's length price, yes, this also should be included. Documentation should show that the transactions are at close length basis. There is nothing called close length basis. So here there is nothing required to be included. Just for namesake they have added this option. So whether the transactions are arm's length price or not, that we have to include in the documentation. Close length price and all is nothing. So this is the incorrect option. This is something which should not be formed part of audit documentation. So now we have a few general MCQs. CA Neha is appointed as auditor of newly incorporated textile company. Before starting the audit, she checks whether the firm meets ethical requirements or if there are any threats to independence. She also sends an audit engagement letter to the management. What CA Neha is doing? She is performing preliminary engagement activities. All these activities are performed, issuing engagement letter, communicating with the previous auditor. So all these are examples of preliminary engagement activities. Next. CA Meenal is approached by River Private Limited to conduct audit for the financial year 24-25. During the pre-engagement discussion, the management informs her that the scope of audit should exclude verification of inventory as it's already being reviewed by their internal audit team. Management also expects CA Meenal to rely on their reports. Is it acceptable? Not acceptable. She agrees verbally to the engagement and begins planning, but no formal audit engagement letter is issued or signed. Choose the most appropriate action. See, when this is happening, during pre-engagement discussion, that means even before you accept the audit only, you did not accept it. As a part of your pre-engagement discussion, before you even accept the audit, management is putting a limitation on your scope. They're saying that you should not verify inventory. So if before accepting the audit only, if you came to know that management is imposing a restriction on the scope of your work, what we should do? SEP 210 says don't accept the engagement only, right? So if you look at the options, the auditor may proceed with the audit. No. Auditor can accept internal audit verification as substitute. No. The auditor shall not accept the audit where management imposes a limitation on scope before the audit. This is what you are supposed to do. CA Rahul, the statutory auditor of Vishal Enterprises, is conducting the audit for the financial year 24-25. As part of his audit procedures, he examines whether accounting records are reliable, verify the sufficiency of supporting documents like bills and vouchers, and also perform procedures to assess internal controls. He also checks if financial statements have been drawn up with reference to entries in the books and disclose financial information appropriately. The management, however, asks him to determine the physical condition of a certain machinery. Do you think does it fall under the scope of audit? No, this he need not do. And to forecast the company's profitability, can he do that? No. Is it having something to do with the future? No. So which of the following procedures falls within the scope of audit? What will fall under the scope of audit? That's what they are asking. Auditor determining physical condition. Will it form part of scope? No. Auditor ensuring proper disclosure of financial information. Yes, this is well within the scope of the auditor. Auditor predicting future profitability. No. Auditor authenticating the genuineness of the legal contracts. This also no. What he can only do is he can ensure proper disclosure of the financial information. That's it. So this is the MCQs part. So I will say here first and second questions are very interesting questions. Third one is not that complicated. Third case scenario, this is manageable. The first two requires your attention. So now let us have a look at the descriptive question. So I will give you a summary of each question. Question number 1A. So what is the summary of this question is the auditor wanted to verify internal controls in the area of creditors. The auditors wanted to verify internal controls in the area of creditors, and they say that here what they are doing is, so let me read it here. CA Aditi is in the process of evaluating internal controls of a company by focusing on controls operating for creditors from whom various goods are being purchased by the company. In this respect, she wants to collect information about existence, operation and efficiency of internal controls. She plans to prepare a set of questions to be circulated among the executives and employees of the company for their responses. She wanted to draft the questions and give it to the client's staff or management to get the responses. So which method she is following? Internal control questionnaire she is following. And also they will ask you to prepare a set of few questions. They are also asking you to draft the questions. This is already there in our material also. We have included already this in the material. So I will suggest you to just have a look at what kind of questions are getting tested here. Just have a quick look at the answer once again from the material only, direct question. Next, all this is fine. See, they say a lot of information here in 1B. If you look at it, so they say various things regarding planning and all, but if you look at the question, straightforward questions they ask, when does the planning for an audit actually start? So as we all are aware, planning will start after the commencement of the previous audit. It will continue till the completion of the current audit engagement. Whether auditor can change the planning decisions during the course of the audit? Yes, like there might be change in circumstances or availability of extra information. So like that there could be various circumstances, and planning is not a discrete phrase, rather an continual or iterative process. So that two aspects you have to write it here. Next one. While scrutinizing the accounts of XY Limited, the auditor XY Limited observed that the company had significant amount of trade receivables outstanding in the balance sheet as on 31st of March, for which external confirmations are not available. CAQ wants to send external confirmation request to select trade receivables, but the management refused the same. Many times I have asked this question in the past also. So this is a question as per SEP 505. There will be a paragraph, management's refusal to allow the auditor to send a confirmation request. Very simple, straightforward question. Like you have to discuss with the management the reasons, get to understand the reasons. If there is valid justification, try to perform alternative audit procedures, so that we have that paragraph from SEP 505. You have to write it here. Next, then we have, this is a question from audit of items of the financial statements. So if I read it here, if I read the last line also, it will be enough. Discuss the audit procedures to be undertaken by the auditor to ensure revenue from sale of goods and services performed during the period is not overstated. So basically occurrence, whether a sale, whatever has been recorded in the books of accounts, that is not overstated. That should be correct amount of figure should have been recognized. So this is a question from audit of items of the financial statements. So what procedures you will perform to make sure that revenue is not overstated? So like you have to check a few things like each sale invoice should be recorded only once, not twice or multiple times. And if any cancelled sale invoices are there, that also you have to pay attention. And at least you have to take a few invoices on sampling basis and verify the journal entries. Obtain confirmations from few customers to know about the genuineness of the sales. Verify whether any fictitious customers have been recorded. Whether shipments are done without the acceptance, without the order from the customers only, whether any shipments are done. Whether any unearned revenue has been recorded as earned. And also is there any uncertainty regarding its ultimate collection, and is there any contingency on the collection. So this is what you are required to do it here. Next question is from audit of banks, where they have asked us to calculate the drawing power. So I will tell you the format here. So here if I read the question, so here only itself we will do it. So CA Govind is conducting stock audit of a borrower availing cash credit facility of 120 lakhs from the branch of a bank. The cash credit facility is against a security of paid stock, debtors up to only 90 days. Margin is 30% for stock and 40% for debtors. So how to calculate? We already know the format. First, you have to take the stock balance. So what is the stock balance? They are saying 150. So from that, they have told that some stock is fully damaged. This you have to exclude. So whatever damaged stock is there, that you have to exclude it. The balance will come to 120. Now, drawing power will be available only on paid stock. From this, you have to take out the creditors balance. So creditors is 60. So if you take out that 60, now margin they are telling on stock is 30%. So you have to take out that margin at the rate of 30%. So if you take it out, 18 lakhs it will come to. So total 42 lakhs of drawing power on the stock. Now on debtors also you can enjoy drawing power. Debtors balance is how much? 55 they are telling. From this you have to take out the debtors which are exceeding for 90 days, which are exceeding for more than 90 days. So those debtors which are for more than 90 days are 15. If you take out that, the balance is 40. They are saying margin is 40%. So margin 40%, you have to take it off. It will come to 16. So how much the balance will be? 24 is a drawing power on debtors. So total drawing power 42 plus 24, it will come to total 66 lakh rupees of the drawing power. So format also we have discussed in our class. We have spent so much of time for this. So this is how you are required to calculate the drawing power. Next. See once again a question from the planning. Yeah. So this is also a question. What matters you are required to consider while conducting the planning? So if you read it, planning is not a discrete phase of an audit, but rather a continual and iterative process. We are all well aware of it. And it often begins shortly after the completion of the previous audit and continues until the conclusion of the current audit engagement. Planning includes the need to consider certain matters even to the prior to auditor's identification and assessment of risk of material misstatement. Explain what are the matters which are required to be considered by the auditor while planning even before risk of material misstatement. So these are the matters which are required to be considered. What analytical procedures you want to perform, and even you need to get a general understanding of regulatory framework. You need to determine materiality, determine is there any need for experts, and also performance of other risk assessment procedures. Right. Next one. So this is a straightforward question. Here I will tell you, they talk about the healthcare institution and they say some lapses in the healthcare institution. And finally the question what they are asking is, in view of the above, discuss the special steps or audit procedures an auditor should apply while auditing the transactions of hospital. Audit of various entities. What are the special points you have to keep in mind while conducting audit of hospital? Those few points you are required to write it here. Next one. During course of audit of a company, CANP has noticed that company's financial position is precarious. The management is unable to pay creditors in agreed timelines, and bankers are also not enhancing its credit facilities as key financial ratios are adverse. Financial indicators. He is of the view that events or conditions have been identified that may cast a doubt on entity's ability to continue as a going concern. That means he performed risk assessment procedures and he identified that there are some events or conditions which cast a doubt on entity's ability to continue as a going concern. He wants to obtain sufficient and appropriate audit evidence to determine whether or not material uncertainty exists related to events or conditions that may cast doubt on entity's ability to continue as a going concern. What additional audit procedures you have to perform? So if you go to SEP 570, there you will find audit procedures paragraph, which we have divided into two categories: risk assessment procedures, further audit procedures. That further audit procedures you are required to write it here. So what are that extra procedures you are required to perform if you find any event or condition which casted out on going concern? Like if the management has not yet performed an assessment, ask them to do the assessment. So ask the management what are the plans for their future action. Not just that, you have to check the feasibility, how far these plans are feasible. Ask whether management has prepared any cash flow forecast. If they have prepared the cash flow forecast, understand the reliability of data, on what basis they have prepared the cash flow forecast, and also whatever assumptions they have made for the forecast, is there a support for that, and whether any additional facts or information have come to auditor's knowledge after management have done the assessment, and also even you need to request the written representations. Next question, RJ Limited has expanded its operation from single Indian state to multiple countries worldwide. Due to its significant growth, the management has decided to appoint joint auditors and has engaged 3 chartered accountants firm. In the context for which auditors' responsibilities will the joint auditors be jointly and severally responsible? Basically, what are the matters where the joint auditors will have joint responsibility, where everybody will be held responsible? So work which is undivided, decisions which are taken by all, matters which are brought to the notice of all joint auditors, whether financial statements of the entity comply with the statutes, presentation and disclosures as per applicable financial reporting framework, whether audit report complies with the requirements of the relevant statute. So these are the matters in which joint auditors will have joint and several responsibility. Next, the auditor is not required to report on the matters specified under 143 subsection 1 unless he has any special comments to make on any of the items specified therein. If he is satisfied as a result of the inquiries, he has no further duty to report that he is so satisfied. Explain clearly stating the matters for which auditor has to perform his duty of inquiry. Basically, they are asking what are the reporting requirements under 143 subsection 1. We have 6 matters which are required to be reported. Just you have to write it. Next. CA Meera, before accepting audit of educational society, wants to ensure that management of society acknowledges and understands its responsibility in respect of certain matters. See here, many students will do the mistake. What they will do the mistake, the moment they read this educational society, they will start writing the answer from audit of various entities, how to conduct audit of an education institution. No, that is not what the question about. The question is, CA Meera, before accepting audit of educational society, they want to ensure that management acknowledges and understands its responsibility. Before accepting any audit, we need to obtain the management confirmation that they accept and fulfill their responsibilities, which we call it as a preconditions for an audit, right? That is what the question about. The question is not regarding how to conduct audit of education institution, but in fact, the question is about preconditions. What are that management responsibilities? Not only this, but she also wants to confirm that management is in agreement with these matters required in connection with standards on audit. Discuss such matters. So what are the matters regarding with management should accept the responsibility? Like in the preconditions, we have that preparation of financial statements, implementation of internal control, provide access to the auditor with books, documents and records. And even all this acceptance, you have to get it by way of engagement letter. Yes or no? So that is what you are supposed to write. From ethics and terms of engagement, you have to write the relevant paragraph, not from audit of various entities. But I know many students would have committed a mistake if they ask the question in the examination. So important, you have to have a look at it. Read the question carefully. Next. CA Keshav has been reappointed as a statutory auditor of PKT Limited in order to reconfirm certain matters. He has requested the management to provide written representation. Under what circumstances? This is a question from SA'580. In what circumstances you will ask the management to reconfirm their responsibilities? Many times we have discussed, even in the marathon also I have covered this. So in case those who signed the terms of the engagement are no longer existing, the terms of engagement are prepared in the previous year, and any indication that management misunderstood the terms or if there are any change in circumstances, these are the cases where we ask the management to reconfirm their responsibilities. Next one. During the audit of Quick Productions Private Limited, I will straight away read the last line. If you read it here, he wants to verify that above mentioned inventories have been valued properly and as per generally accepted accounting policies, how he should proceed to verify the above. So this is a question from audit of items of the financial statements. There will be a question relating to inventory. In that inventory, valuation of inventory that is what they are asking. How do you obtain evidence regarding valuation of inventory, especially raw material and work in progress? Right. Especially raw material, consumables and work in progress. How do you obtain evidence regarding valuation? That's what you are required to write it here. Now this is a question 5B is a question from how to conduct audit of NGOs. Here also if I ignore all this and read the last paragraph, mention 3 points each peculiar situation which you would like to incorporate in your audit program for audit of said receipts and remittances of donations. If you are conducting audit of an NGO, how do you obtain audit evidence regarding the receipts and remittances? Next one. Dream Builder Limited is an established player in the real estate sector and has developed strong internal controls across most areas. You are appointed as head of the internal audit team and you have a close relationship with the internal control system of the company as it evaluates the effectiveness of internal controls and also suggests improvements in the internal control. Explain clearly stating the activities related to internal control. This is a question from risk assessment internal control. You will find one question called what are the activities of the internal auditor? So what are the activities of the internal auditor with relate to internal controls? So what internal auditors are supposed to do with regard to internal controls? What you will do? So that's what here they will try to say here. Like as an internal auditor, you have to evaluate the effectiveness of internal controls. You will examine operating and financial information. Even you will review the operating activities and also check the compliances with the laws and regulations. So this is what as an internal auditor you are supposed to do. Next. You are auditing the financial statements of Gen Limited, a manufacturing company. During a meeting, Mr. J, CEO, questions the auditor's ability to detect all material misstatements, including those caused by fraud. He insists that since the auditor is a professional, the auditor should provide absolute assurance on the accuracy of the financial statements. Is the contention of Mr. J correct? No. He is expecting the auditor to give absolute assurance. Is it possible? No. Discuss the objectives of the auditor in accordance with relevant essay. Nothing but essay 200. Objective related question is there? No. Like as an auditor, we are required to obtain only reasonable assurance whether financial statements are free from material misstatements. So what is reasonable assurance? It is a high level of assurance but not absolute assurance. So that objectives of audit paragraph, you have to write it here. Next one. As a part of the risk assessment procedure, an auditor is required to determine whether any of the identified risks are in their professional judgment significant risk. In making this determination, the auditor must consider several key factors. Explain the factors that auditor should consider while determining whether an identified risk qualifies as a significant risk. Once again, important concept. Many a times it has been tested. So what are the factors which will affect to determine whether the risk is a significant risk, whether that risk is a risk of fraud, or is the risk related to recent significant economic accounting or other developments, or is it relating to very complex transactions? Does it involve transactions with the related parties, and what degree of subjectivity is involved? Higher the subjectivity, higher will be the risk. And whether risk involves significant transactions that are outside the normal course of business. So these are the matters which auditor will consider in determining whether a risk is a significant risk. Now, next one. You have been appointed as statutory auditor of Amro Limited, a listed entity. During the audit for the year ended 31st of March 2025, you noticed that there are undisputed dues relating to GST and Provident Fund which have been outstanding for more than 6 months. Additionally, the company has not deposited certain amounts of income tax and excise duty which are under litigation before various appellate authorities. So there are undisputed dues also, there are disputed dues also. They are asking what are the reporting requirements. So clause 7 we have, if it is undisputed statutory due, we have to check whether the company is regular in depositing all the undisputed statutory dues. If some amount remains outstanding for more than 6 months as on the balance sheet date, then we have to report it. If it is a disputed due, we have to report what is the amount involved in the dispute and the forum where the dispute is pending. That's it. Next one. CA Sohail, while conducting statutory audit of a company, has noticed that there are items such as computer software, patents appearing in the books of accounts. These are identifiable non-monetary assets without any physical substance, held for use in the production or supply of the goods or services or for rental to others or even for administrative purposes. He wanted to ensure that such items are properly valued. Basically, how to verify the valuation of intangible assets. So if you go to audit of items of financial statements, pick the question intangible assets. There various assertion related audit procedures will be given. You have to write the valuation related, assertion related audit procedures. Right. So this is what series 1 of the MTP. MCQs are good here and there. A few questions like that educational society question I have told. So that is a bit tricky one. Right. So shall we proceed further with the MTP series 2? Let us do it, everyone. Right. So coming to the series 2, here also we have MCQs. MCQs are basically very, very easy here. And there is no such great complication in the MCQs. Let us try to first quickly wind it up. Patrika and Co. Chartered Accountants have been appointed as statutory auditor of AVR Retails Private Limited, a company which is engaged in the business of electronics for the financial year 24-25. The firm is auditing the financial statements of AVR Retails Private Limited for the first time during the audit. First time means it is an initial audit engagement. So during the audit, the auditor made the following observations. What are they? The company operates through multiple retail outlets with heavy volumes of cash and card sales. Okay. Stores managers are allowed to approve cash discounts also and product returns independently. There is a lapse in internal control here. Reconciliation between POS records and back deposits is not done regularly. Periodical reconciliations are also not done. The IT system used by AVR does not log any changes to inventory records, making it difficult to track the adjustments. There is no trail also. The company has an internal auditor, but this auditor does not respond directly to senior management. That means he is not having objectivity here. If the internal auditor is made responsible directly to the top level management, he will be more objective. And if at all we want to make use of that internal auditor's work, will be more comfortable. But here, internal auditor is not reporting to the senior management. During internal audit, it was found that automated system failed to charge 12% interest on overdue customer payments due to a technical glitch. There is a software issue also. During audit documentation, an audit assistant saved working files in unsecured folders and did not mention the reviewer's name. So we have kept it in unsecured folder. Even you did not mention the person who conducted the review. After signing the audit report, a senior audit team member altered the inventory sampling sheet to reflect a different method without recording the reason. Once you have issued the audit report, you can make only administrative changes to audit documentation. But one audit team member completely altered the inventory sampling sheet together, and there he has made some changes. What method they have followed, he changed it altogether, but he did not mention any reason or why he has changed it or what is the date of change. All that information is not recorded. Now, based on the above facts, they are asking us a few questions. Let us see which of the following statement is a clear non-compliance committed by the audit assistant. So what is the non-compliance from below? Completing audit documentation within 60 days of the audit report, this is valid. Using standard templates, that is also permitted. Omitting the reviewer's name and saving the files in the unsecured folders, yes, this is a clear non-compliance. Preparing working papers electronically, that is also permitted. Which of the following is the most appropriate response for the change in inventory testing sheet? Permit the change as it will improve the audit quality, no. Permit the change as the outcome is not changed, definitely not, even though you have changed the method. So such changes should not be permitted unless a reason and date are recorded. This is a correct statement. So if at all you are making any changes to the audit documentation, what is the reason because of which you are making the change? What is the date of change? If you record that, then only changes will be permitted. Delete both versions and prepare a fresh irrelevant statement. Option C is the correct statement here. The internal auditor discovered that the software failed to charge 12% interest on overdue payments due to technical glitch. Does reporting the situation fall under the scope of the internal audit? Yes. The first option says no, as it involves customer transaction. No. Yes, as it relates to internal control failure, he has to do that reporting. Next one. Whether statutory auditor can rely extensively on the internal auditor's work in the given situation where internal auditor does not report to higher management? No. Why? Because there what is compromised? Objectivity and independence is compromised. So no, he can't rely because independence and objectivity are compromised here. As I have told, nothing specific here, all are straightforward questions. Next one. CA Adya, a partner at TAC and Associates Chartered Accountants, is conducting the statutory audit of Next Gen Appliances Private Limited, a company engaged in the manufacturing and sale of consumer durables for the financial year 24-25. During the audit, the following observations are made. What are they? The company conducted its year-end physical inventory count on 30th of March. Inventory at one of its warehouses was valued at 95 lakhs, was excluded from the count as the location was not visited by him due to flood in that area. Unable to obtain audit evidence regarding inventory by way of physical verification. If physical verification becomes impracticable, you need to perform alternative audit procedures. So if you see here, what should CA Adya do regarding the inventory that the warehouse could not be physically verified due to flood? What you should do, since the inventory is below materiality, ignore, no. Issue adverse opinion, not required. Perform alternative audit procedures to obtain sufficient and appropriate audit evidence. This is what you are supposed to do as per SEP'25. Next option, accept management's written representation. No, that is not permitted at all. Next one. A large debtor balance of 68 lakhs is outstanding for over 9 months. The customer has partially shut down operations and he has not responded to balance confirmation request. So what should CA Adya's, no, this is not this one. Yeah, this one. Which of the following is not a valid alternative audit procedure in case of non-response from a debtor? See, if you did not get a response from the external confirmation, you will perform alternative audit procedure. What is not a valid alternative audit procedure? We are required to answer. Examination of subsequent cash receipts and payments. Yes, this is a valid alternative audit procedure. Review or sales or purchase order. Yes, this is also a valid alternative audit procedure. Board resolution for the amount. what to do with the board resolution? Amount of debtors and creditors will be recorded on the basis of transaction. If the board passes a resolution, will it be enough? No, they should be supported by supporting documents. So checking the board resolution has nothing to do. It is not a valid alternative procedure. Examination of related invoice, yes, this is also valid. So which is not a valid alternative audit procedure? Verification of board resolution. Next one. Revenue recognition is done at the point of dispatch. However, CA Adya noticed that certain dispatches made on 30th of March 2025 were billed, but the goods actually left the premises on 2nd of April. That means risk and reward is getting transferred on 2nd of April, but they are recording the sale entry on 30th of March only. Is it acceptable? No. So what should be CA Adya's conclusion regarding revenue recognized for sales billed on 30th of March but dispatched on 2nd of April? So recognize the revenue in March? No. Revenue should be deferred to April since ownership and control did not transfer before year end. Yes. Consider it as timing difference. No. No action is required as stock is not returned. No. The correct option is it is a cut-off procedure. You should ask the management to defer the revenue recognition. Ask them to recognize only when the risk and reward has been transferred. That is happening in the April, which forms part of the next financial year. Next one. The company capitalized an amount of 25 lakh rupees as a part of machinery installation, which included 5 lakh rupees incurred on employee training and inauguration. Do you think this employee training and inauguration expenses also must be capitalized? It should not be capitalized. Till the time machinery is in working condition, to bring the asset to the working condition, till that amount if you capitalize, okay, fine. Machinery is installed, everything is completed, that inauguration expenses, training expenses, you should not capitalize it. So if you come to this point here, while verifying the capitalized expenses of machinery installation, CA Adya noticed 5 lakhs towards training and inauguration. What should she do? So recommend for reclassification of 5 lakhs as revenue expenditure. This is what she is supposed to do here. Next one. A creditor's balance of 20 lakh rupees remains not confirmed despite related external confirmation requests. The management contends that amount is payable and valid. See, this is also related to the external confirmation only. So management's contention alone will not be enough. We need to perform alternative audit procedures. Next. Maya and Associates, a chartered accountant firm, is appointed as an auditor of ABC Private Limited. CA Maya, partner of the firm, has recently bought stock in ABC Private Limited. She believes that the company's goodwill will increase after the audit report is finalized, which could lead to a rise in the stock price. As she reviews the company's financial statements, Maya decides to give unmodified opinion to help her investment. Tell me clearly what kind of threat is there? Self-interest threat is there here. Yes or no? So that's what the first question is about. As Maya has bought the stocks in ABC Private Limited, so what kind of threat is there here? Self-interest threat is there here. Next, Puneet, the CEO of ABC Private Limited, has requested them to modify certain disclosures in the financial statements in a way that could mislead the stakeholders. CEO of the company is insisting that he will make some changes in the financial statements that would mislead the stakeholders. He argues that more favorable presentation will help the company secure more investments. Why the CEO wants to do it? Because if he can manipulate and show good position in the financial statements, he can get more investments. Ashi, another partner of the firm, feels that complying with this request would compromise ethical standards and worries about professional conflicts with the client. Definitely, this is a matter of worry. So now if you look at a question, Puneet, the CEO, is requesting that Ashi and Maya to modify the financial statements disclosures in a misleading manner. Which fundamental principle of professional ethics would be violated if they agree? So you tell me, if you are associating yourself with wrong information, which fundamental principle will be violated? The first and foremost one, integrity. What do you mean by integrity? You should be an honest person, straightforward person, sincere and truthful. You should not get associated yourself with such information which you know it to be false. So if you have accepted for making the changes in the financial statements, that means you have violated the fundamental principle of integrity. Next one. Maya and Associates has also been appointed as statutory branch auditors of Delhi branch of CAC Bank. While carrying out the audit, the following key issues were identified. What are they? Issue 1. PV Limited's accounts has seen no recovery for the past 18 months. However, the bank has not applied NPA norms or income recognition norms to this account. The management justifies this by stating that account is guaranteed by central government and NPA and income recognition norms are not available, not applicable. Do you agree with that? See, this statement is half true. if any guarantee has been, if any advance has been guaranteed by central government, you need not classify. For assert classification, for provisioning purposes, it will remain in the standard category, but for income recognition, you have to treat it as NPA. For asset classification, it will remain in standard category, but income recognition, you have to treat it as NPA. That means you have to recognize interest only on realization basis, only when you have received it. But here what the management is arguing, since it is a central government guaranteed, so they are telling that both for asset classification and income recognition are not applicable, they are saying, which is wrong actually. For asset classification, norms will not become applicable here. It can remain in the standard category, but income recognition norms for NPA will become applicable here. You can't recognize the interest income on accrual basis. You have to recognize it only on cash basis. So if you look at the statement, is the bank's decision not to apply NPA and income recognition norms to account of PV Limited valid under regulatory guideline? So if you see here, the bank is corrected to the extent of not applying NPA norms for provisioning purposes. However, this exemption is not available in respect of income recognition purposes. That means income you have to recognize only on realization basis, not on accrual basis. For asset classification, okay, you need not follow NPA norms, but income recognition you have to do it only on cash basis. Next one, CWB Traders has applied for a cash credit limit from CIC Bank for supporting working capital requirements on account of business expansion. In discussion with the CWB Traders, CIC Bank has requested different forms of security depending on the nature of the assets, which included immobile property like warehouse, goods in stock, accounts receivable, insurance policies. So if you are giving immobile property, we will create mortgage. If you are giving stock, hypothecation, accounts receivable, assignment, insurance policies is also assignment. Borrower provided the security and was sanctioned the cash credit of 4.5 crore. Now what is the question? CWB Traders offered its warehouse as security for the loan. Yes. CIC Bank created a charge on the warehouse. Which form of security has been created? Since it is an immobile property, mortgage has been created. And whether the bank is required to get the stock audit done mandatory? No. Only when the funded exposure is more than 5 crore, then only stock audit is mandatory. In the given case, funded exposure is 4.5 crore, stock audit is not mandatory. So security created is mortgage, and bank is required to get stock audit done? No, bank is not required to get the stock audit done. Yes, security created is mortgage, and the bank is not mandatorily required to get the stock audit done of the cash credit since funded exposure is less than 5 crore. So if you look at the answer, 3 AAA and D. Right. So if you see here, AAA and D. Next. Coming to the general MCQs. During the audit of PQR Limited, the audit team decides to develop a graphical presentation of the company's internal control system. Graphical presentation, the moment you came to know graphical presentation, here only answer you should have got it. Which method of internal control evaluation they are using? Flowchart. This provides a bird's eye view of the system, including flow of transactions. It helps the auditors to understand and evaluate internal controls in a correct perspective. So which method they are referring to? Flowchart. Next, KRAT & Co has been appointed as the statutory auditors of Astral Resorts Limited. This is the first time the firm is having audit engagement. That means it is an initial audit engagement in the hospitality sector. After obtaining a comprehensive understanding of the resort and its environment, the engagement partner CA Ankita and other engagement members of the team have undertaken the activity of development of an audit plan for the audit of the resort. As per SA 300 description, which of the following matters is not a part of developing audit plan, which will not be included in the development of audit plan? Nature, timing and extent of risk assessment procedures, will it be included in the plan? Yes. Nature, timing and extent of further audit procedures, will it be included in the plan? Yes. Other planned audit procedures? Yes. Nature, timing and extent of resources, this is something which will be decided in audit strategy, not in audit plan. So they are also asking which of the following matter is not a part of developing audit plan. The last option. Why? Because this is the matter which is relevant for development of audit strategy, not audit plan. Next one. CA Raj is in the completion phase of the audit of Happy Private Limited, a manufacturing company, for the financial year 24-25. On 26th of May 2025, he became aware that a fire has occurred on 15th of December after the end of the financial year. A fire accident happened. Adjusting event, non-adjusting event, non-adjusting, at one of the company's premises. As a result of the fire, all inventory stored at that location amounting to 2 crore were destroyed. However, these inventories were insured with Insure Good Limited for 75 lakh rupees, and the company has lodged a claim which is yet to be settled. The issue remains uncorrected in the financial statements. Which of the following statements is most appropriate? See, fire accident is a non-conforming, non-adjusting event because it does not conform to any conditions existing as on the balance sheet date. If it is a non-adjusting event, no need to adjust the financial statements, just give a disclosure in the notes to accounts. The auditor should ask the management to disclose in the notes to accounts. Yes, this is what is required to do. The auditor should ask the management to adjust the financial statements to book the loss, not required. The auditor should ask the management to adjust loss of 2 crores, not required. The auditor has no responsibility. This is also incorrect. He should ask the management to disclose it. Right. So these are the MCQs. Now, if we come to the questions, yeah. So if you look at it here, first question, first descriptive question. CA Sakshi, the statutory auditor of ZMC Limited, a medium-sized trading company, was reviewing the company's internal control system as a part of her audit procedures. She noticed the following instances where errors and lapses occurred. An employee failed to take action on an important report due to lack of understanding. Nothing but people who are required to implement internal controls, they don't understand the purpose. The finance team made duplicate payments. 2 employees colluded. Collusion is there. The owner approved certain transactions bypassing standard operating procedures. Management might misuse their power. Duties were not segregated. No proper segregation of duties by way of collusion. CA Sakshi discussed these findings with the management and explained that such control failures, despite the existence of internal controls, are not rare. She also highlighted internal control system inherently have some limitations. As we all are aware, internal controls also suffer from some inherent limitations. Based on the above, what is CA Sakshi trying to communicate to the management? She is trying to communicate that no matter how effectively you implement internal control, they provide only reasonable assurance. They don't give you absolute assurance. Why? Because internal controls are also suffering from some inherent limitations. And they're also asking you to explain what are that inherent limitations. Those all inherent limitations, you have to write it here. Next. See, here also they have given so much of information. But finally, here also if I read the last paragraph, the answer will become pretty straightforward. Explain why periodical review of the audit program is essential. What could be the consequences of continuing with the outdated audit program? So this is a question from Audit Strategy Planning and Program. So if you go to the audit program related discussion, you will have a paragraph, periodical review of audit program. That's what you are required to write it here. Next. Dheeraj and associate chartered accountants have been appointed as statutory auditors of SPICE Limited for the financial year 24-25. CA Dheeraj replied solely on the prior year's audited financial statements and did not apply any audit procedures regarding opening balances. He is of the view that since the financial statements were audited by the predecessor auditor, therefore he is not required to verify them. It is an initial audit engagement and the auditor feels that he is not required to verify opening balances. Do you agree with that? No. SA 510 says in the case of initial audit engagement, it is your responsibility to obtain sufficient and appropriate audit evidence whether opening balances contain a material misstatement which could affect my current period financial statements. And whether the point of view of CA Dheeraj is correct? No. As I have told now, SA 510 objectives ask you to obtain audit evidence regarding opening balances and also write what are that specific audit procedures you need to perform regarding opening balances. From SA 510, you have to write this. Next one. So this is similar kind of question. We have seen it in the RTP. So more or less the same kind of question they are testing here. Identify and explain the assertion that the auditor will check by performing the following procedures. An inventory held by the entity on behalf of another entity has not been recognized as a part of the inventory. Rights and obligations. Only your inventory should be included, not others. Employee benefit expenses have been incurred during the period. Occurrence. Inventory has been recognized as lower of cost or NRV, valuation you are checking here. Sales shall include the dispatch of the goods made at the year end as they belong to the relevant period, whether the sales belong to the relevant period or not, cut off. Any inventory held by third party on behalf of the entity has been included. That means if your stock is lying with some third party, not third party stock lying with you, if your stock is lying with some third party, whether that is also included in your inventory or not, you are checking. That means here you are checking the completeness assertion. See, if other stock is included in your books, if you are checking it, that is rights. If your stock which is lying with a third party has been included in your stock or not, if you are checking it, then it is completeness. Next one. Now, next question, very many times I have asked this question. What things you will try to obtain evidence regarding advances in the case of the banks? If you are conducting audit of any bank, what things you will try to verify to obtain audit evidence regarding advances? Straightforward question. Many a times they have tested this. Straightforward question here we have. Next, ABS and Co chartered accountants have been appointed as statutory auditors of Aerotech Systems Private Limited a company that makes advanced equipment used in the airplanes. Considering technical and complex nature of the operations, the auditors recognize that involvement of experts in the audit is required. Does consideration for involvement of experts fall within the domain of the planning audit? Is checking the involvement of experts is also forming part of the planning of audit process? Yes, 100% yes. See, if you look at the answer here, if you look at the audit strategy, planning and program, so they say that what will be considered. So planning includes considering the following activities. So what and all will be included as per SA'300 analytical procedures to be performed, obtaining a general understanding of the regulatory framework, determination of materiality, and even involvement of experts. So if you see here, out of the many factors we are considering while planning, one of the most important factor we are considering whether there is any requirement of involving the experts. So to answer the given question, yes, involvement of experts falls within the domain of the planning process, but this is how you are required to present the answer. Next. The auditor should maintain alertness for related party information while reviewing records. He may inspect the records and documents to identify related party transactions. This is also many times I have asked this in MTPs and RTPs. What are the documents? Give a few examples of the documents which auditor can verify to identify the related parties, like entities' income tax returns, investment registers, information supplied to regulatory authorities, shareholder register, statements of conflict of interest. So like that, so many documents are there, like LIC policies. Any of these documents you can verify to identify the existence of the related parties. Next one. CA Ritu is conducting statutory audit of KLM Limited. During the audit, she encountered significant difficulties in obtaining certain information from the company's finance team. She also noted that one of the accounting practices, although acceptable under applicable financial reporting framework, may be the most appropriate considering the company's circumstances. With reference to SA 260, about what significant findings you are required to communicate. Straightforward question from SA 260. There are some significant findings which we are required to report to those charged with governance. So what will all fall under that significant findings? Like your qualitative aspects, appropriateness of accounting policies that you can communicate, and what difficulties you have faced. And unless all of those charged with governance are involved in the management, whatever matters that you have discussed with the management and whatever written representations that you have requested. And also, what are the circumstances that affect form and content of the auditor's report, and any other significant matters arising during the audit, which you in your professional judgment might feel it as significant. All this should be communicated. Next. FAIR Limited has been sanctioned a cash credit facility of 1.5 crore by Worthy Bank. Based on monthly stock statement submitted for the last quarter, the drawing power is calculated as 1.45 crore. The outstanding balance in the cash credit at the end of the quarter is 1.4 crore. That means the outstanding balance is within the drawing power and sanction limit. Interest charged is 6 lakh rupees, and even there is a credit also in the account, but the amount is 4 lakh. Will it be classified as out of order? Very important. See, when a cash credit loan, when an account will be classified as out of order. So if you look at the audit of banks chapter, they will say that an account will be classified as out of order if, in case of CC, if the outstanding balance is more than drawing power or sanction limit, then it will be classified as out of order. Or if it is within the outstanding, if it is within the drawing power or sanction limit, but there are no credits, then also be classified as out of order. Sometimes the amount will be within the drawing power, within the sanction limit, there will be credit also, but that credit is not even enough to cover the interest component, then also be classified as out of order. Three cases, guys. If it remains out, if the outstanding balance is more than drawing power or sanction limit, out of order. If it remains within the drawing power or sanction limit, but there are no credits, out of order. If it remains within the outstanding balance, if it remains within the drawing power or sanction limit, there are credits also in the account, but they are not even enough to cover the interest component, then also out of order. Here in the given case, it is getting falling under the third case. See here, the outstanding balance is 1.45 crore, drawing power is 1.4 crore, drawing power is 1.45 within the limit. There are credits also, the credit of 4 lakh rupees is there, but interest itself is 6 lakh rupees. So even though there is a credit, it is not at all, it is not even enough to cover the interest component. So this account will be classified as out of order. Next. Right. Delightful Limited is required to present comparative financial statements for the financial year 23, 24, 25. CA Mohit has been appointed as a statutory auditor for the year 24, 25. While reviewing the financial statements, he notices that last year's financial statements contain an adverse opinion as a whole due to the misstatement in the evaluation and disclosure of the debtors. Guide CA Mohit for his duty regarding the treatment and addressing the issue while drafting his audit report. What disclosures is required to make in this regard? See, if you remember the discussion from SA 710, which is talking about comparative financial statements. So they say that if it is corresponding figures, if you are conducting audit of the corresponding figures, if last year auditor's report contain a modified opinion, and if the reason because of which last year auditor gave the modified opinion, if it remains unrectified even for the current year also, then the current year auditor also will modify the opinion and he will explain the reason. He will give reference to both current year and previous year in the basis for opinion paragraph. However, if it is comparative financial statements, then audit report will be covering all the years. Audit report will be covering all years which are presented. For all the years your audit report will cover. And not just that, in case of that comparative financial statements, you have to include the other matter paragraph. So let me show you the answer here. They cover both the scenarios. They are talking about corresponding figures also. They are talking about comparative financial statements. Both the disclosures they are giving. So if it is a corresponding figure, if the auditor's report of the previous year includes an adverse opinion and the matter which gave rise to the modification is still unresolved in the current year, then the current year auditor also shall modify the opinion and explain the basis for modified opinion paragraph. You have to refer to both current year figures and corresponding figures and also the matter giving rise to the modification if you are able to evaluate the effects or possible effects. If you are unable to evaluate the effects, then just you have to say that opinion has been modified and the matters remain unresolved. Next one, if it is a comparative financial statement, your opinion will refer to each and every period, and particularly if last year was not audited by you, you have to include another matter paragraph. In that you have to say that financial statements of the prior period were audited by predecessor auditor and what type of opinion predecessor auditor has given and what is the date of that report. This is required to be disclosed in the audit report of the current year if it is comparative financial statements. Next one, let us have a look at this. CA Sulsa is conducting the statutory audit of Sati Limited. While reviewing the purchase records, she noticed a large purchase transaction supported by only one internal document. The management responded that its usual practice is and assures her of documents authenticity. However, the amount involved is material and no external supporting evidence is necessary. What should CA Sulsa's approach in the situation as per the professional skepticism principle? So there is no external evidence. Management is only giving internal documents. Can she blindly accept it? No. Why? Because professional skepticism, you have to remain alert to unusual circumstances. You need to have a questioning mind. And also they are asking why it is important for an auditor to maintain professional skepticism. So you have to write about that professional skepticism from ethics and terms of engagement. So what will happen if you maintain professional skepticism? You reduce the risk of overlooking. You reduce the risk of overgeneralizing. You also reduce the risk of taking inappropriate decisions. So that entire professional skepticism paragraph you are supposed to write it here. Next, CA Mahavir is conducting a training session for newly joined audit trainees. He explained the concept of audit risk and its three components. What are the three components, guys? We have risk of material misstatement, detection risk, and in the detection risk we have two more components: inherent risk, control risk, and then detection risk. Totally three components. He mentions that while two components of the audit risk are beyond the auditor's control, which one? Inherent risk, control risk, beyond auditor's control. Only one component can be influenced by the auditor. Which one? Detection risk. Identify the components of audit risk that can be controlled by the auditor. Which he can control? Detection risk he can control. Give two examples of the component. They are also asking you to give the example of the detection risk. Also explain how the auditor can manage this component. How he can control the detection risk? By performing more audit procedures, by being very careful, by doing in-depth audit, you can control your detection risk. Next one. Shiksha Public School maintains a fee register and issues receipts to the students for fee collection. During the audit, the auditor observed that some students were granted concession and some fee payments were pending. As an auditor, what procedures would you perform to verify the student collection in such an educational institution? So audit of educational institution, how do you verify the receipts? Straightforward question. Next one. So this question, directly here also, if you read the last point, you will be able to understand it here. Explain the differences between prospective financial information and historical financial information. Basically, this is a question from standards on audit. In the standards on audit, if you go to the introductory discussion in my material, if you go to standards on audit, before actually starting the standards, I have given the introductory information. There you will find this part. What is prospective financial information? What is historical financial information? So these definitions are once again important for MCQs. So better if we have a look at it here. Right. So if you see here, historical financial information relates to information which is already expressed in financial terms about economic events, conditions or circumstances which are occurring in past periods. Whereas prospective financial information relates to financial information based on assumptions about the future. And how does this distinction impact the level of assurance? Tell me, What assurance we generally provide in the case of prospective financial information? In historical financial information, if it is audit, we give reasonable assurance. If it is review, we give limited assurance. But in the case of prospective financial information, the assurance which we operate will be moderate. Moderate assurance we will give, and we will only check in the case of prospective financial information, we only check whether assumptions are reasonable or not. We will not give a guarantee that this prospective information will turn into reality. Our responsibility is to check whether the assumptions made by the management are reasonable and whether this prospective financial information has been presented properly or not, and that only we give the opinion. So that's why we give here moderate assurance. Next one. CA Saurabh is conducting the statutory audit of UVW Limited for the financial year 24-25. While verifying the purchases made by the company, he decided to perform analytical procedures for obtaining audit evidence. Once again, this is a question from audit of items of the financial statements. There, if you go to the purchases, they are asking you what analytical procedures you will perform in the area of purchases. So in the material, they generally say four kinds of analytical procedures I can perform. Consumption analysis. Basically, here what you will do is you will calculate what is the raw material consumed and compare the same with the previous year. In the current year, how much raw material was consumed? In the last year, how much raw material was consumed? And you will try to see whether the same impact has been reflected in the closing stock or not. If there is any reasons are there, you will try to evaluate the reasons. Then stock composition. This we have already seen in the previous discussion. The stock composition, you calculate raw material as a percentage of total stock. This percentage you compare it with the last year and evaluate the differences. Then you also calculate ratios, different kinds of ratios we will do, like creditors turnover ratio, stock turnover ratio we do, and even we perform quantitative reconciliations also we can do. So these are the analytical procedures we perform in the area of purchases. Next one. Money Limited is a listed company engaged in the business of manufacturing. During the financial year 24-25, the company has given loans to its subsidiary and provided a corporate guarantee. State the reporting responsibilities of the auditor under clause 3. Straightforward question. No. What are the reporting responsibilities under clause 3 of para number 3 of CARO? So that you have to write it here. Next. TED Limited has taken an office building on rent for its operations. The auditor wants to verify rent expenses. Straightforward question. How you will verify the rent expenses? Next one. CA Sandeep has identified certain misstatements during the course of the audit of an entity. Except 2 misstatements, all were corrected by the management. He wants to obtain written representation from the management regarding effects of these uncorrected misstatements. Describe matter contained in such written representation. So generally this is a question from SA 450. As per SA 450, once you identify the misstatements, all the misstatements will be communicated to the management. Now management will correct them. If the management uncorrected some misstatements, even after communication also, if the management is not correcting the misstatements, we will ask the management to give a written confirmation that those misstatements which are uncorrected by the management are not material. So that written confirmation I have to get it. That's what even they are also asking. What information will be contained in that written representation which you get from the management? So like if you see it here, right? So in the given case, all except 2 misstatements have been corrected. The auditor shall request a written representation from the management and where appropriate those charged with governance, whether they believe the effects of the uncorrected misstatements are immaterial individually and also in aggregate to the financial statements as a whole, and even you have to get the summary of all such items. Also discuss documentation requirements as per SA 450. So you have to include in your documentation what are the amounts below which you have set the triviality level. So what is the amount of misstatement below which you are considering them as trivial, and all the misstatements accumulated during the audit, and auditor's conclusion whether uncorrected misstatements are material or immaterial. So these things should form part of your documentation. Next, CA Kavita is statutory auditor of Sigma Limited. While conducting audit for the financial year 24-25, it is noticed that there is a risk of material misstatement regarding identified litigation or claims. In those circumstances, it has been considered appropriate by the auditor to send a letter of specific inquiry to external legal counsel of the company. When is an auditor likely to send a letter of specific inquiry? When you feel that the external legal counsel might not respond to the entity's external legal counsel because of the restrictions, then you will send a specific letter of inquiry. And what will be included in the letter of specific inquiry? You will include the list of all the litigations, wherever available, what are the assessments management has made regarding the outcome, and you will request the entity's external legal counsel to confirm the reasonableness of management's assessment and also whether anything is missing from that litigations and claims. So this is the information which will be included in the specific letter of inquiry with which you communicate with the entity's external legal counsel. So this is a question from SA 501. That's all, guys. This is what MTP do. So wherever required, discussion is required, that I have done it. But it's my humble request to once again go through the MTPs before you go for the examination. Yes, here and there a few interesting questions are there. So that's all, guys. So bye, take care, do a good level of preparation. Okay.